Good afternoon and welcome back to Moneycontrol live stream. You're watching the closing bell. I'm Santosh Nair.
And I'm Yatin Mota.
Well, a late afternoon sell-off in equities pushed the NSE Nifty below the psychological 17,000 mark. Markets opened on a lackluster note, and in the last couple of hours, we saw some fair bit of selling setting in. Among the big losers of the day, mainly shares from the metal and PSU banking sector. Pharma and information technology services stocks did find some takers. We had Infosys and Tech Mahindra among the key gainers of the day. The India Volatility Index was up by about 4.8% to 15.18, and among the prominent Nifty gainers we had Cipla, Kotak Bank, Infosys, Dr. Reddy and Tech Mahindra, while among the prominent losers we had Bajaj Finserv, Bajaj Finance, Adani Enterprises, Tata Steel and Hindalco.
Absolutely, and I think the market also took the STT hike slightly negatively, and typically हमने ये देखा है कि जब STT गवर्नमेंट ऑफ इंडिया इंक्रीज करती है तो मार्केट पे थोड़ा बहुत नेगेटिव रिएक्शन आता है. ऑब्वियसली सेंटिमेंट ऑलरेडी वीक है और उसमें STT की रेट्स बढ़ाने से जो कि फाइनेंस बिल ओरिजिनली में इंक्लूडेड नहीं था, ये पीछे से जब अमेंडमेंट हुआ है येस्टरडे, उसमें ये निकल के आया कि STT अब FNO ट्रेडिंग पे बढ़ जाएगी. Santo, earlier on a future, stock future or index future, STT for 1 crore worth of transaction was 1,000 rupees. That got increased to 1,250, a steep 25% hike in STT. And if you talk about options, there is some confusion. The government has proposed a 23.5% hike in the rate of STT on option sellers, and this STT is paid on the premium of the option. Here the intention is to increase the STT, but I think there is some error and omission on the part of the government, because they have taken the STT rate which were applicable before June of 2016, which was 1,700 rupees per 1 crore of option premium, which got increased to 2,100 rupees per crore. Actually the STT rate prescribed by the exchanges and the government is 5,000 rupees. So there is some oversight and some mistake there. Clarification is awaited, but in all probabilities the 5,000 rupees of STT which is paid on 1 crore rupees of option premium, that might go up as high as 6,250 if you take the percentages which is proposed in the finance bill. So yes, the government clarification is awaited, but the option trading and the future trading STT goes up, and hence your trading costs move up very sharply. As I said, 25% in the hike that the government has proposed in the STT, which was passed in the Lok Sabha with some clarification, I think, which is expected any time. There could be some serious changes to the STT, which might again hurt the trader sentiment.
Well, there's a second negative development for FNO traders in the last couple of days. Yesterday you had the NSE revoking the do not exercise option for in the money option contracts, and today you have the increase in STT. Now typically, Yatin, what seems to happen is that if this were a bull market, it would have been largely ignored by the market,
absolutely,
because you are anyway making money. But whenever these kind of moves come in a falling market, that is where it really pinches, because traders are struggling to make every rupee out there. So a steep 25% in hike in transaction charges means definitely the profit margins will shrink to that extent, and it becomes very tough for traders. But I'm sure if the moment things start looking sunny again, this will be very quickly forgotten. At least that has been the past experience also. Whenever there was a hike in STT, initially there's some protest, but later on the market just moved on.
But Santo, I think the government has really simplified things and bought a lot of things at par. Before the show we were discussing about how the debt mutual funds are now in a higher tax ambit than before. The indexation benefits, the capital gain benefits will be taken off. And so is the case with insurance, wherein the premium, if it exceeds 5 lakhs per financial year, then the maturity will be taxed in the hands of the taxpayer. So again, when it comes to insurance, debt products, fixed deposits, which are already taxed higher, and now the option traders, wherever I think the government sees that people are enjoying due to an arbitrage, or option traders are making more money, just go ahead and increase the taxes.
Well, definitely, I think that's come as a big blow for the mutual fund industry as well. The decision to bring the taxation for debt funds as well on par with those for bank fixed deposit. Obviously, a lot of protests from the mutual fund industry.
True.
They are claiming that the argument that banks are not getting enough deposits because of people putting money in debt mutual funds is actually not true. In fact, we'll have to check the numbers, but they've been saying that debt schemes in fact have been seeing more of outflows for almost the last couple of years, barring the liquid scheme, which continues to see strong response. Well, with that, let's move on to the key stocks on our watch list this afternoon. Starting with Ashok Leyland, the stock managed to hold ground in a lackluster market today. It managed to weather the sell-off. However, it's been moving in a very tight range for quite some time now, between the 130 to 140 rupee band. Broking firm CLSA is bullish on Ashok Leyland, and according to the broker, strong demand for commercial vehicles and the company's improving margins are the two key catalysts for Ashok Leyland at this point in time. Overall, commercial vehicle sales have been pretty good for the last many months now, and CLSA is of the view that multiple tailwinds for the commercial vehicle segment will drive sales over the next couple of years. And while commercial vehicle players in general have been hiking prices, CLSA feels the impact on volume sales will be limited, but definitely it will make a big difference to the overall margins. And Ashok Leyland managed to improve its market share in the heavy truck segment, and CLSA is of the view that the company will be able to retain the gains made there.
Absolutely, and if you look at the trucks and buses segment, I think they have been doing well. As the economic activity picks up, the volumes from the commercial vehicle players have been quite strong. When it comes to transportation, and we're talking about logistics and things like that, let's also talk about InterGlobe Aviation. Obviously, if you look at the analyst meet, it was a quite interesting one. जहाँ तक कि इंटरग्लोब एविएशन का सवाल है, यानी इंडिगो एयरलाइंस का सवाल है, इन्होंने अपनी फ्लीट डबल करने का इंडिकेशन एनालिस्ट को दिया है. इनफैक्ट बाय 2030, which is 5-7 years from now, they are intending to double their fleet size. Obviously, this is the question which all analysts asked, given the aggressive expansion plans of Air India, which is now under the Tata fold. Plus, Indigo guided that they would be, getting more into the international aviation operations. They have a code share with a lot of, European and Middle Eastern airlines. But I think that code share and higher number of flights to foreign destinations is something that the company is looking at. Obviously, when it comes to the fourth quarter earnings, yields are under pressure. Obviously, crude has come down at the fag end of the quarter. So that will help, company regain margins next quarter. But yes, because of the seasonal weakness in travel, you could see a muted Q4. That's what Indigo has guided. Macquarie has an outperformer rating on this one with a target of 2,600. However, brokerages like Jefferies do believe that the stock will underperform because of the sell-off by the Gangwal family, which is expected in tranches moving ahead, and they have a target price of 1615, which is close to the current market price and a downside of nearly 200-250 rupees. So watch out for this counter. Interesting times to come, but the company has guided for a weak Q4.
Well, Indigo, clearly the steady sale of shares by the Gangwal family, that's something that's been limiting the upside in the stock, because operationally things have been slightly getting better, and also we are now moving into the holiday season, which typically is good for aviation companies in general. Although this time the company has indicated at its management meeting that the yields have been slightly lower in the fourth quarter. However, it still continues to be higher than what they had witnessed during pre-COVID. And let's move on to the last bunch of stocks on our watch list this afternoon. Asset management stocks sold off sharply. Among the big losers, we had HDFC AMC, UTI AMC, and Birla Sun Life AMC. Nippon Asset Management was also under pressure. However, the stock fell by less than 1%. The other three stocks fell by almost 4%. Now, the government's proposal to bring taxation for debt schemes on par with bank fixed deposit, and also the removal of the indexation benefits on debt scheme from April 1st onwards, that has considerably dampened sentiment for asset management companies. Now, these stocks have anyway been underperforming for quite some time now, this despite the strong inflows that's being witnessed into equity schemes over the last couple of years. the big concerns are twofold. One is that the company's profit margins have remained pretty much stagnant for quite some time. That's one big concern. The second concern is that with SEBI trying to reduce the cost for unit holders and bring down the total expense ratio that mutual funds are charging, there is concern that profit margins could further be under pressure. And today's proposal clearly has been a big dampener for the sector, and as a result you saw all the stocks selling off very sharply.
Absolutely, and typically the debt mutual funds contribute nearly 20-25% of a typical AMC's bottom line, and the profits will surely go for a toss as people become indifferent towards a bank fixed deposit versus a debt mutual fund. Do you think, Santo, the bank lobby is stronger than the AMC lobby?
At least that's what the mutual fund top brass seems to be saying. Most of them have said the same thing, that this proposal is largely the handiwork of bank and insurance companies lobbying very hard against them. We can't say for sure how much merit there is in this argument, but at least that is the view in the mutual fund industry.
Okay, and the last stock on my radar is Campus Shoes, and आपको अगर ध्यान है तो आज 2 करोड़ शेयर की आज पल डील इस काउंटर पे हुई, लगभग 347 से 348 के बीच ट्रांजैक्शंस आपको होते हुए दिखाई दिए. न्यूज़ रिपोर्ट्स के हिसाब से टीपीजी कैपिटल मोस्ट लाइकली सेलर इस पर्टिकुलर काउंटर में है, और हमने ये देखा है कि जो न्यू एज कंपनीज हैं और रीसेंट लिस्टिंग्स हैं यहाँ ऊपर के लेवल से बहुत ज़बरदस्त सेल ऑफ आया. इनफैक्ट अब कैंपस शूज़ की बात करें तो पीक से लगभग आधे से कम दाम पे अभी स्टॉक आ चुका है. आज अगर हम देखें तो 7.5% इक्विटी की ब्लॉक डील हुई, तो क्लियरली यहाँ बड़े जो इंस्टीट्यूशनल इन्वेस्टर्स हैं वो शेयर्स बेच रहे हैं, और डील होने के बाद स्टॉक डील प्राइस से भी 3-4% नीचे ही जाके बंद हुआ. तो क्लियरली आपको बताता है कि मार्केट का सेंटिमेंट वीक है. डिमांड शायद इंस्टीट्यूशनल लेवल पे होगी, लेकिन जब बड़े सेलर्स बेचते हैं तो स्टॉक गिर रहा है. हमने ये देखा जोमेटो में, पेटीएम में, कुछ हद तक जो कैंपस में तो आपको देखने मिल रहा है. नायका हर भाव पे आपको डील होती हुई नज़र आई, और हर भाव से शेयर आपको गिरता हुआ भी नज़र आया. इनफैक्ट आज 5 नए रेजिग्नेशंस नायका में आपको दिखे, उनके ब्यूटी सेगमेंट में जो रिसेंटली ही उन्होंने शुरू किया था, और वहाँ कंपनी ज़्यादा फोकस कर रही है. तो ब्यूटी एंड फैशन सेगमेंट में काफ़ी सारे रेजिग्नेशंस, वो भी स्टॉक प्रेशर में. तो न्यू एज कंपनीज आईपीओ डिमांड अच्छी थी, आईपीओ लिस्टिंग अच्छी थी, बट अब जो है वो मार्केट में बहुत ज़्यादा प्रेशर इन स्टॉक्स पे आ रहा है.
Well, and with that it's a wrap on this episode of Closing Bell. Thank you for watching.
जुड़ने के लिए बहुत बहुत धन्यवाद.
And we hope you all have a great weekend. So we'll be catching up with you again back on Monday at 9 AM.